Today we're going to take a closer look at two of my favorite semiconductor companies, AMD and Nvidia. Unfortunately, the past few hours we have seen a nice amount of price target reductions by numerous analysts, and we also have an update on PC shipments that might not be the best case scenario for these two companies. Regardless, I am still bullish in these two, and I'll explain why in today's episode. But before we go any further, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a lot of great links, my Discord channel, and also my tech channel. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
It's definitely been a wild ride for semiconductor companies. Today, for example, stocks were down pretty big, but now they are pulling back up. Nvidia is sitting at $152 as I am recording, and it's close to its 52-week low of $140. We can see from its 52-week high, the stock is down roughly 54%. Also, before we go any further, and if you want to learn a little bit more about the semiconductor company, I did a video here where I talk a little bit more about the semiconductor manufacturing market, or if you're interested in what are some of the stocks I'm watching this week, make sure to click the videos above. If we take a closer look at AMD, similar story. Stock price was down very early today, but it kind of pulled up, still down about 1% as I am recording, sitting at $76.23 with a 52-week low of $71.60. I do want to say these two companies are some of my biggest positions in my portfolio, and for that reasons I don't add too much from time to time, but if I didn't have the exposure I did, I would gladly be purchasing at these levels. So first, let's take a closer look at these price target reductions that we have seen, all which seem to happen today on July 12th. First, we can see KeyBank lowered Nvidia's price target to 230 from 250, but they do maintain overweight rating. Then we see Cowen lower Nvidia's price target to $200 from 265, but they do maintain outperform ratings. Citigroup reduces price target to 285 from 315, reiterates buy rating. And if we take a closer look at AMD, KeyBank cuts their price target to 130 from 150 and keeps the overweight ratings. So the first similarity is all these analysts are reducing their price targets, but all of them seem to be higher than the current stock price the stock is at right now. The second thing is all of them are keeping their original ratings, none of them downgraded or upgraded. So this tells me that, especially in the ones that we saw, they are still bullish within the company. I do want to say when it comes to analysts, this is something I personally don't follow too much, because analysts are, in my opinion, are looking at the very short term in price targets, right? They're looking for the next 12 months. As long-term investors, we really shouldn't care what happens within the next 12 months. We should be seeing what's happening in the next few years. And we've definitely seen a lot of kind of bearish thesis of what's happening in the semiconductor market right now with the overall macroeconomics, consumer spending decreasing, but we also have a lot of bullish thesis for the semiconductor market. The huge adoption of artificial intelligence, machine learning, autonomous driving, automation, robotics, e-commerce, fintech, the list goes on and on, data centers, streaming, video games, crypto. So again, there are so many emerging technologies that need the kind of solutions that AMD and Nvidia provide. So even though maybe the short term might seem painful, in the long term, I am still very bullish on both these companies. Now, unfortunately, I want to showcase this report by IDC, which kind of shows a slowdown in PC shipping. It actually fell 15.3% in the second quarter of 2022 compared to the same time last year. This was also the second consecutive quarter of lower shipments following the 2-year growth that we saw in 2020 and 2021. And the decline was worse than expected. One of the major issues is supply and logistics issues that came with lockdowns in China, but also the macroeconomics we're seeing globally right now are creating some more headwinds. For example, a research manager of IDC mentions that fears over a recession continue to mount and weaken demand across segments, now as consumers become more cautious about their spending. One thing to note is the total PC volume was 71.3 million units. And if we take a closer look at prior years, 2018 was 62.1 and 2019 was 65.1. So these levels of shipments are still way above pre-pandemic levels, and I do believe that is an interesting and bullish point to kind of understand. And here IDC shared the top 5 companies with overall market share and total PC shipments. I do want to say the one that surprised me the most was was Apple, which saw about a 22.5 decrease compared to the same time last year. But it is important to note that IDC does expect Apple to ramp up its production in the second half of the year as they release new products and new generations of their iPads, iPods, and everything else they have. So like we see, the consumer market is definitely taking a hit, and that's why we're seeing kind of these short-term price reductions in a lot of these semiconductor companies. But like I previously mentioned, most of these companies also provide solutions for data centers and enterprise, which at the moment, and that could change at any time, but at the moment still continue to have a healthy spending wallet. So like I mentioned, short term there could be some more bearish pain. In the long term, I am very bullish in these two companies. So take care, have a good day, and see you next time.